This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. U.S. futures slipped early on Monday, and European shares were mixed as the Apple-led risk rally faded somewhat, with investors turning more cautious ahead of the Fed's highly anticipated policy decision on Wednesday. Wall Street unexpectedly surged on Friday, despite U.S. data underscoring the higher-for-longer case when it comes to interest rates. A pickup in core PCE inflation and solid personal income and spending numbers for September initially weighed on stocks, adding to the tech rout triggered by last week's sluggish earnings results. But it only took an earnings beat from Apple to revive risk appetite. Stellar results from ExxonMobil and Chevron helped too, with all three of Wall Street's main indices gaining by 2.5% or more. Ultimately, the priority for the markets is for the Fed to reach peak hawkishness, and although a 75 basis point rate hike is a done deal this week, investors are hoping that Powell will signal a slower pace going forward in his press briefing. However, it's not all about the U.S. economy, as there are fresh concerns about a worsening slowdown in China. The caution is helping the U.S. dollar recoup some further lost ground. A stronger yen and pound have been major contributors to the dollar's recent downfall. The pound's relief rally may have further to go, as the Bank of England looks set to join the 75 basis point bandwagon on Thursday. But for now, sterling has started the week on the back foot against the greenback. The Japanese currency is also under pressure again, with the dollar climbing back above 148 yen, having retreated substantially on suspected Bank of Japan intervention last week. The Australian dollar is struggling too, as the RBA is unlikely to steer away from its recent shift in its policy stance of raising rates by only 25 basis point increments when it announces its latest decision at 3:30 GMT on Tuesday. The euro was no exception, being unable to gain on the back of hotter than expected flash inflation figures out of the Eurozone today. Most commodities were down on Monday, weighed by the worrying PMI data out of China. With no change in sight to China's zero-COVID policy, there are big question marks about the outlook for commodities such as copper that have relied on Chinese demand for so long. Crude oil futures, meanwhile, were heading lower for a second day. OPEC's recent output cut is likely limiting the sell-off. This was today's Daily Market Comment. Thanks for joining us at XM.com.